Welcome back to another video. We are going to be explaining my investment in cannabis, the CNBS ETF. CNBS ETF is a ETF that has anything and everything to do with the cannabis industry. This is our redheaded stepchild of our portfolio because it has caused us the most pain as well as excitement, and I'll speak to that in just a moment, over the last year. It is definitely a large portion of our portfolio. It is our third largest position via investment value, and I do believe it's one or two on dollars actually invested. I want to say QCLN and cannabis have the most dollars invested, with CNBS being number one, I believe, but it is up there. So with that being said, I want to talk to you about types of companies that are in CNBS, our role in cannabis, and a lesson that I learned back in February of last year with Wall Street Bets getting involved in the cannabis-related companies that saw this particular ETF skyrocket. So let's get right into it right after this. Before I forget, I do have a playlist down below, and I'm trying to get all of our investments. I'm doing videos such as this as to why each investment is in our portfolio, and I'm adding those in on a definitely a weekly basis. I'm trying to get multiple in on each week so that you can see the role that each particular ETF has in our particular portfolio. So back in January of last year, we had $50,000, and what we did was we took 5 different ETFs and put $8,000 into it. So you have heard of SMH and QCLN. Those were 2 that got $8,000. Cannabis was our third one, and then 2 in our growth portfolio that got the $8,000 each. Then with the last $10,000, so again, 8 at 5,000, or 5 ETFs at 8,000, that's 40 grand, and then 5 more ETFs at 2 grand made up that last 10,000 for the $50,000 that we invested. And I'll be talking about those because those are still in our particular portfolio as of today. So we had a different strategy, different portfolio allocation at the first quarter / first half of the year. And so that's where QCLN and cannabis saw a lot more dollars being invested, and that's how they got to having the most dollars invested in our portfolio. Since probably about midway throughout the year, we have been doing $300 a month, just DCAing on a consistent basis. And so the expense ratio for this particular ETF is 0.75%, which basically means for every $10,000 invested, you pay $75 a year. Again, this is definitely on the higher end side. There's Vanguard, Fidelity, things of that have expense ratios of 0.1%, 0.05%, 0.08%. We do have a couple of those ETFs that you'll see, but this is definitely on the high end of the expense ratio. Quick story, back in February, March of last year, Wall Street Bets really started pumping cannabis-related companies and just the industry as a whole, right before COVID really took over. And this particular ETF, I had purchased in January around the $19, $18 range. And this particular ETF shot up to about $40, $39.50, $40 and some change. And me being novice and me being very new at that time last year, I thought that this was going to last forever. Not only did it not last forever, and our particular investment got up to 100+% at that time, it has fallen from there. And at the time of this recording, I believe I'm down almost 40% in this particular ETF. My cost basis is around $19, and as of Friday, it closed at 12 and some change. And so, long story short, when you start seeing these outlandish returns in such a short period of time, this happened in all of 2 weeks, you have to begin to take money off the table. Even if you are a buy and hold investor such as myself, this is the biggest lesson that I learned. If I could do it again, of course, hindsight is 20/20. Ride that up, kind of scale off as those investments kept going, and then in time, once things cooled off, once Wall Street Bets came out of there, take those returns and that gains that I received and then put that capital back to work in that same ETF. Of course, as I mentioned, hindsight is 2020, but that is definitely a lesson that I'm going to be taking for the rest of my life and using that in any other future opportunity, and I'll pass that on if that does happen in a particular investment that we are in. So the industry, cannabis-related companies, anything from like weed maps, where they show you the different dispensaries in your particular area, companies that produce products for the growing, the supplies needed to sell the cannabis to the end consumer. We even have loan servicers for cannabis-related companies because, again, with the legislation not passed in some states as well as federal, cannabis companies or cannabis retailers can't get the same type of financing that a normal business can. And so you see a multitude of different kind of companies that are somewhat tied to the cannabis in this particular ETF. It is a smaller ETF. It only has 35 companies or stocks in this. And so, other large, of course, you can go to Vanguard Total or S&P 500. You have 500, you have thousands. The majority of ETFs have somewhere between 50 and 100 companies. But this one has 35 holdings, so it is very small. It is very condensed. And so the last thing that I really like about this particular ETF is it also has companies in this particular ETF that are headquartered outside of the United States. So you get a little bit of international exposure regarding cannabis in this particular ETF. And so the major holdings that you might be familiar with this are your Tilrays, you got your Canopy Growth, Weed Maps is probably the top three that if you're not 100% involved in a cannabis, you might be familiar with those companies or have heard those companies come across CNBC, things of that nature. So the role in our portfolio, it's a little bit of a mixed bag. And the reason that it is a mixed bag is because this particular ETF is 100% dependent on legislation being passed. This particular ETF, in my viewpoint, is not truly going to take off, even though when you look at it on a year-over-year basis, cannabis is exploding. But it's not going to take off on the investment side, I believe, until legislation is passed and it is legalized across more states and ideally across the United States. And so until then, we're going to be in this lag period of very minimum to negative returns, I believe. And how long that runway is, it's very hard to say. But my belief and my thought pattern as of right now is once we get through whatever parts of the Build Back Better plan, once we somewhat get on the backside of this COVID, which is a huge question mark, that's when we're going to start seeing cannabis take off. Because cannabis, in the eyes of politicians, is huge tax dollars. And so that's why I say Build Back Better plan is going to be crucial. With it needing so much revenue, tax revenue, to fund the ideals, the projects, the transforming of the United States, they're going to have to go somewhere to raise those tax dollars. And cannabis is actually an industry that is willing to pay more taxes so that they can become legalized and actually do more business across the United States. And so it's a nice win-win for both parties, legislators as well as cannabis-related companies. But until all of this happens, cannabis on the investment side is not going to see anything. And so that's where I say it is an offensive role in our portfolio, but I believe we're going to see these 0 to plus or minus 10% over the next couple of years until that thing is truly passed. And at that point, then you're going to see these outlandish, I said 10%, probably plus or minus 5%. Then you're going to start seeing these outlandish 20, 30% for the next couple of years after that to, hopefully average out to be a 15 plus % return. My viewpoint as of right now is trying to get as much dollars in as I possibly can, so that then I can get 15, 20% on maybe $20,000 invested versus only having $5,000 invested. A little side note is I did put $1,000 of capital into cannabis in my son's custodial account. His particular custodial account, we have 18 years. He is going to be 2 in August of this particular year, and I bought this right when he was born. And so he has 18 years for legislation to pass, which I definitely feel that will occur within the next 18 years. But for someone that doesn't have possibly as much time, this might not be the best investment to put your money in the short term because you're just so much dependent on the legislation of the politicians in DC before you start seeing the returns on this particular portfolio. So with that being said, this is Cannabis. Again, take a look at that playlist down below. You're going to be seeing all of the different positions we have in our portfolio, and I look forward to seeing you at the next video. Please subscribe to the channel if it has brought you value, and I look forward to seeing you again. Bye-bye.